Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. Okay. All right, welcome back to the program. My guest is seated. He is Dr. Mohammed Musa Tumala, who is the Director of Monetary Policy Department at the Central Bank of Nigeria. Of course, this is the morning after the D-Day, which was yesterday, that we saw the Central Bank Governor, Olayemi Cardoso, briefing the press. He did not just only talk to us about or read out the communique, he actually also did answer questions from journalists. There were a lot of questions to him yesterday as to when do we even hope to see inflation, being curbed or going down gradually. He answered that. He also did answer questions on Binance, which I specifically asked because I was also the person that asked the Binance question last month, so I needed to follow up. And Governor Cardoso did mention, see, it's not none of our business. There's a collaboration amongst us as agencies, but it just really stops there. Of course, the Central Bank of Nigeria is not a security agency. Bearing in mind what has happened in in the last few days, an executive escaping custody. He also did talk about the recapitalization of banks. Of course, that the MPC is enjoining the CBN to recapitalize banks, but he also mentioned that banks are safe, secure, and sound. So now let's understand the rationale behind all of this, and Dr. Tumala is joining me, like I mentioned earlier, Director of Monetary Policy Department at the Central Bank of Nigeria. Dr. Tumala, good to have you again on the program.
Good morning, Nancy. Thank you very much for having me.
Now, let's get started. These decisions, we heard earlier from the Central Bank Governor reading out MPR increased to 24.75%, CRR for commercial banks at 45%, for merchant banks has been raised from 10% to 14%, liquidity ratio at 30%. Can you just perhaps explain why the MPC came up with this decision at this time, 200 basis points increase for the MPR?
Well, there were two major decisions that were made by the MPC. One is raising the MPR by 200 basis points. And the second is also making an adjustment to the asymmetric corridor. Further tightening, or going through cycles of monetary tightening, is a response to inflationary pressure. You have seen, of course, the February inflation that went as high as 31.7%. We're also very much aware of the lag between monetary policy actions and the impact on expected impact on inflation. Secondly, the committee looked at the developments in the FX market, the response of foreign investors. The response was very positive after the last meeting, so we have had quite a sizable inflow into Nigeria. But recall that Nigeria is competing for international investment along with other countries in emerging and developing segment of the global economy. Egypt is there, Kenya is there. There are so many countries that are eyeing foreign investments that has been on the decline, recording as low as only 23 billion of flows into emerging and developing economies in February. So the committee is looking at those matrices and arriving at that decision that was made yesterday.
It seems, of course, it's a month gap, and like I mentioned yesterday, one long month, as it were, one full long month. So many things have happened, but the constant there is that inflation is still high.
Yes, I mentioned that inflation, prices will have a lagging response to monetary policy. So we have a fair idea of that lag in Nigeria is around five months. So we'll begin to see,
Oh, it's around 5 months.
Yeah, so we'll begin to see, the decisions we take today, 4 to 5 months down the line. So that is the lag. But there are certain developments that could occur in shorter term, and that is the response in the foreign exchange because of the response of international investors, and also what we have observed that is happening in the money market. We adjusted, the MPC adjusted the asymmetric corridor to plus and minus 300. So that was following the observation that since the last MPC meeting, banks were not making deposit of their excess liquidity at the central bank because the rates were as low as 15%. And so the MPC had to respond to that. Now it is going to be 24.7 minus 3%, which is going to be 21.7. Yeah. So banks will be able to respond by depositing their excess liquidity at the SDF window.
That's the standard deposit facility.
Standard deposit facility. But since the last monetary policy meeting, we have observed limited activities on the SDF window.
Now, very interesting that you just told me that it takes about 4 to 5 months to see the MPR pass through to general price levels, because that has actually also been in question in the last few years, that we do not have that transmission mechanism. So you're telling me now for sure that it's within 4 to 5 months. Then if that is the case, there was a hike last month to 22.75%. Yes, that was the last MPR.
Yes.
Now 24.75%. How is the MPC interpreting that vis-a-vis the pass-through period you've just told me now? Because if we see the last MPC meeting at the last year was 18.75%.
Yes.
So in 2 months, as it were, or okay, not 2 months, from the last time, from I think July MPC till March now, we've had 6% raise for interest rates. Yes. So wouldn't it be like an overdose, as it were, because the MPR is now jumping about 600 basis points in just a few months? So will you still, does that mean, I'm asking you 2 questions now, does that mean that in 4 to 5 months, the general price level, consumer inflation, will drastically come down because of this thing that you just told me now? This is my own analysis of it.
So it's a cycle, because when MPC raises rates, banks will reprice, their assets. Okay, and so manufacturers will pay more in terms of interest, and that is the time also they begin to procure raw materials and so on. So that is where the lag is coming on for manufacturers to pass on that price to consumers. Of course, they would be using their stock, raw material stock, to manufacturers. So that is where the lag is. But however, when the cost of money goes up and it becomes too high for manufacturers to borrow for their own activities, that will affect the volume of their activities. And that is where the effect of tightening will come on the general output, general economic activities. But of course, also consumers will begin to make choices and readjust their consumption, in which case demand will fall. So prices will fall. But at the end of the tunnel, when prices are at a level that monetary policy sees, or the pattern is in the direction monetary policy sees, okay, that is when monetary policy will change its stance.
The governor gave us a signal yesterday to say, okay, this battle is not long drawn.
Is not going to be, he said, we need to take the pain now because there may be further tightening until we bring inflation under control.
And what is under control for the central bank? I know that Governor Cardoso has also mentioned inflation targeting. That's what you of course, your department is looking at now.
Yes.
Inflation at about 21%, and I think that's also what the fiscal authorities are also saying. With the way we are going, do you think that we can achieve that target by the end of the year, 21%? Even at 21% is also still high.
It's still high, but inflation target is a long-term target. It is not a target it is not something you achieve within the medium term. So you can look at that 21.4% as a medium-term target for the Central Bank of Nigeria, for the government of Nigeria. And so that target is for December 2024. Of course, you would have heard that over time, Central Bank had focused on bringing down inflation to a single digit, okay, between 6 and 9. That had been a long-term target for Central Bank. So that is why today you can say that, or in the past. You can say that the Central Bank of Nigeria has had an implicit inflation targeting program. But the bank is going to transit into explicit inflation targeting and is going to ensure that it focuses on price stability. The bank is going to communicate what the inflation target is going to be the long term, and will have to communicate reasons for misses for that target. So inflation targeting comes with a lot of responsibilities, transparency, communication, and so on. And that is why, that's what we are doing now, putting all the necessary structures in place before the bank announces, okay, we have, at the end of the day, now transited to an explicit inflation target. And this is going to be our long-term target.
Okay. Now let's take a look. Let's go back to that foreign exchange issue. Because the governor also mentioned it yesterday. In fact, this morning I was also tracking what the foreign exchange market is doing. We saw a circular, of course, from your bank talking about selling
to
BDCs. Now $10,000, they can make more than 1.5% profit or whatever, just to translate it for our viewers. Now, the governor mentioned that yesterday, talking about the gains that we're seeing so far in the foreign exchange market. At least there seems to be some kind of, the Naira has been appreciating in the last few weeks. Yes. How will that now impact general price level? Because he mentioned it also in passing yesterday. How would that impact general price level? Will it accelerate? Because Nigeria is an import-dependent nation. Majority of what we wear, food, we have strong appetite for imported goods. Will it accelerate the cost for, or will it make inflation decelerate faster? Yes, that is.
Okay,
do you understand what I'm saying?
Yeah.
Yes,
so
because there's an inflation, there's a foreign exchange pass-through.
Yeah, if you look at the inflation development or price developments in Nigeria, or like any other import-dependent country, you can segment the development into two. One, the factors within that economy, and the second one, factors, in other economies where they import. And that is why we say there is a pass-through of FX, okay, to domestic prices. So whenever there is a depreciation or appreciation in your currency relative to your trading partners, okay, that will pass through. Is there a pass-through in Nigeria? Yes. We have estimated about 20% of pass-through. Now, secondly, inflation in other changes in prices, general price level, even when your currency is stable, in the economies where you import either raw materials or finished goods, also passes to your economy. So stabilizing your FX market contributes substantially to stabilizing your general price level because of that pass-through. So that is the gain from the stability in the FX market.
Now, finally, because I have another guest which will still be looking at this. But doctor, let's take a look at page 2 of the communique, and let me quote Mr. Governor. He mentioned members noted the continued rise in headline inflation driven largely by food prices because of supply shortages and high cost of logistics and distribution. The committee therefore was of the view that addressing food insecurity is key to containing current inflationary pressures. The committee continues to say this. How is this also impacting the decision? Because this is the fiscal side now. This doesn't concern you.
So that statement is the committee's, admittance of the limitation of monetary policy. That inflation, food inflation in Nigeria is both monetary and structural. While the MPC addresses the monetary side of inflation, okay, the physical, okay, should address the structural side. And by our understanding, or by its understanding, the structural factors are the ones you have just listed. Because we have observed that within, if you look at, inflation in different states, you would see a difference as much as 20%. While Kogi State is recording over 40%.
Kogi is always coming high.
Yes. Bauchi is recording, say, 26. So the difference is so huge. And you can only attribute that to, first, distribution factors. Okay, are these foods being delivered to local locations? But by the way, Kogi is has a different kind of challenges. So if you go up north, the food, if you see food being loaded on trucks and so on, they are likely to tell you they are going to Lagos. They are going to Enugu, and so on. So commodities fly over, the middle.
So Kogi is like a pass-through, but it's not a stop.
So it's not a stop. So they just see things passing. But none is meant for them.
Of it.
So they have to go to Lagos themselves, or go up north to bring back what has passed through them. So that's the additional cost. Challenges states in the middle of Nigeria, So, they are called junction towns, and unfortunately, and they have very active trade because truck drivers and so on stop over, spend in those locations. But that is but I think that the solution could come within the state to ensure that the state governments, realizes this development and tries to create, just like the way Lokoja was being planned, for a port. So if that happens in Lokoja, then Kogi would have very low price because it will be a destination for goods now. Okay, the goods would be offloaded either for export
or
or
further adjoining
offloaded whether
states
they
too.
are imports. Yeah.
Yes.
So Kogi will benefit from that. Benue is different because Benue produces a lot of food. Okay, so so that is where the distortion comes in the form of distribution of food within the country.
Okay, Doctor, is there any other thing you would like to say just before we end? Because I also wanted to ask the question, but you've answered, as in what can state governments do? Because states are also sub-fiscals, if I put them. But I think
State government can do a lot. State governments can ensure discipline within markets. Okay, where
what do you mean by discipline within markets?
Where
Is it
they are
regulating them?
Not regulating, but rather, ensuring that there is no monopoly. Okay, when trade associations, ensure that even if you bring goods into a particular location, you cannot sell. You have to sell through them. They determine, the price. So there is what one of my colleagues call seller's inflation. So they determine, what to sell. So monopolies, like that is. So I think the state has a responsibility to ensure that such monopolies do not, exist. You have seen, of course, what has happened in areas of cement and so on when you have few players. And you also have seen what has the response to the dairy products. The inflation for dairy products was over 80%. And that's because there were just very few players.
And the governor responded to that.
Yeah, the governor responded to that. There was no competition, and therefore when you open it up, then competition will set in, price
would adjust accordingly.
will adjust accordingly.
Thank you very much, Dr. Tumala, for coming, and I wish you well. And you know why I'm saying I wish you well.
Okay.
I don't want to say that publicly, but I really wish you well. And thank you for all the work that you have done so far. Thank you very much.
Thank you. It was a pleasure for me to serve my country,
Yes.
and I know why you are wishing me well.
Yes.
Thank you very much, Nancy.
Thank you very much, sir.
Yeah,
All right, I've been speaking with Dr. Mohammed Musa Tumala, Director of Monetary Policy Department at the Central Bank of Nigeria. Let's quickly take a break, and we will take another shade of this conversation. Of course, the governor of the Central Bank mentioned yesterday, he mentioned a lot of things around the decisions. Dr. Tumala has also given us an understanding. I think I can take a few things away in terms of the pass-through period, what states can do to avoid even sellers, inflation, as well as monopoly. My guest, Professor Kenife, will be joining me after the break, and we will delve into another direction of the same conversation.
And the question is, does this suggest a return to developmental interventions? And the answer is no, it doesn't. And let me explain why it doesn't. Because we have been consistent in saying that we will withdraw from direct interventions. We have been consistent in saying so. We have also been consistent in saying that we will work with those who we believe have the capacity to successfully intervene in whatever manner they can. And that, by the way, includes even capacity building. It's not strictly speaking, direct funding or anything like that. It isn't. It extends to a whole host of different areas. So where we see that that capacity is there, the central bank would be happy to partner, and that goes similar to what one had just said about the collaboration that we have had with regulatory authorities and also law enforcement authorities. But let's face this particular issue. Now, the fertilizer that was given out was the residue of an intervention that had been done before we came into office. It was not something that was done directly by us. And the options were either to leave them there to rot away or to give them to those that we believed had the capacity to distribute. And that is exactly what we did with the handing over to the Ministry of Agriculture.
Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to our YouTube channel, drop your comments as well as like, and most of all, share our content.